Hey guys, Sean here. So how high can the price of gold really go? Right now, we are living in a time of chaos that gives gold the perfect setup for an amazing bull run. We are seeing a 40-year high inflation of 7.9%, which could get worse down the road. There's conflict in Europe and people are beginning to realize if you don't have your money physically with you, it can get confiscated away. Now, more and more people are seeing the value in physical gold. In fact, I believe we might be in a precious metal supercycle that could last for the next 5 to 10 years. Even banks like Goldman Sachs are declaring we are in a commodities boom. I remember the first time I bought a gold coin, it was this Kugran, and I got it for around $1,200 back in 2013. Now today the price of gold is around 1920, and I believe in the next decade we will be surprised at how high the price of gold will be. And in this video, I really want to investigate and speculate at how high the price of gold can really go. We are going to look back in history and see if there are clues that can help us understand where gold will be 10 years down the road. Now let's take a look at the previous two bull runs that happened over the last 50 years. The first started when Nixon cut away the final link to the gold standard back in 1971. Previously, gold was set at around $35 an ounce, but when the United States stopped any redemptions of dollars for gold, suddenly every currency in the world is now fiat and backed by nothing. Now, the US could start printing money without having the constraints of gold. And this really caused the stagflation of the 1970s, which started the big bull run for gold all the way up to $850, right? So if we take the starting price of gold to be $35 an ounce just before Nixon closed the gold window and the peak of $850 an ounce in the early 1980s, we get an incredible 24.2 times gain in the price of gold. So the first gold bull run lasted around 9 years and then settled at around $250 to $300 an ounce. Let's take a closer look at the second bull run of gold, which started in 2001 and lasted till 2011, right? I believe that gold was severely underpriced at that point of time and was really revaluing itself. And if you remember what happened in 2008 and 2010, the Fed had to do 2 rounds of quantitative easing, QE1 and QE2, pumping a total of around $1.2 trillion into the system, right? If you recall, that was the first time we actually heard of the term quantitative easing, right? Now, this is when mass money printing officially began and the price of gold soared all the way up to just under $1,900, right? So if we do our same calculations, using the starting price of gold at $250 and the ending price of around $1,900, we get a 7.6 times gain in the price of gold. Now, this isn't as big as the first bull run, but I think it gives us a good indication of what the price of gold might be at the end of this super cycle. Because we are now facing the same situation of money printing, but at a grander scale. Since 2008, the Fed have almost tripled the money supply to over $21 trillion. And just in 2 years from 2020, they have more than doubled their balance sheet to almost $9 trillion. And that's crazy. I know those are really mind-boggling numbers, but it kind of shows you how much money is sloshing around the system. So if we are in a current gold supercycle, how high can the price go? And let's say we take the 2016 low of $1,073 and we use the conservative estimate of 7.6 times gain of the previous gold bull run, we get a price of around $8,150, right? But if we use the first bull run's number, right, the price of gold could theoretically reach almost $26,000. But let's be realistic here. Let's take the middle of the road and let's assume that this bull run will be the average of the two previous ones. And if we do that, we will get around $17,000 per ounce as the price of gold. That means these 15 coins here could be worth over $250,000 at the end of the bull run. How about that? Now, I'm not saying that prices will reach that magnitude, but it is something worth considering, right? In today's economy with so much money sloshing around, it is entirely possible that when money piles into gold, it could move big. Just remember that Bitcoin went from $1 to over $60,000 in just 10 years, so let that sink in. But I think that is only a partial picture that we need to investigate further. We have all heard of the gold standard before, where money was backed by gold, and this time we can actually calculate what the price of gold will be if a currency reset happens, right? This is not a myth and could very well happen, and there have been many politicians who have supported a return to the gold standard. People like Ron Paul and even Donald Trump once said bringing back the gold standard would be hard, but it would help set a standard on really where to base our money. Now let's start off conservatively and say we just use the M2 money supply of the United States, which is reaching $22 trillion, right? And we divide it by the total amount of above ground gold in the world, which is around 205,000 tons or 6.6 billion ounces of gold. So if we do the calculations, we kind of get around $3,700 an ounce gold, and that is the price of gold if it accounts for just the money in America, right? Still much higher than today's price of around $1,900. But what if we go all the way? Now, according to the IMF, the world's global debt has reached an incredible $226 trillion and growing. So if gold was to account for all this debt, it would have to revalue to an incredible $34,000 an ounce. And that means that these 15 coins here are now worth over $500,000 in this scenario, right? I know it's wow and it's not really likely to happen, but it really does get us thinking how much money has been printed, borrowed, and really sloshing around in our financial system, right? But here's the most shocking calculation. Now, if we take the amount of gold that the United States has, which is reported to be around 261 million troy ounces, and we use it to account for the M2 money supply, as we recall, is $22 trillion, we get an insane gold price of over $84,000. And that means that if the US dollar was to be pegged back to gold, the price will have to be revalued to at least $84,000. Now, if that happens, these 18 coins over here are now worth well over $1 million. Now, do I think this is likely? No, I do not. But this just shows how much money the United States has printed compared to the gold reserves they physically possess. Now, throwing all these numbers like spaghetti on the wall can be fun, but how do we know when it is peak gold? And that's why I personally like to measure the price of gold to other assets like houses and stocks. But my all-time favorite is to track the S&P 500 to gold ratio, which really lets me know if gold is overvalued or undervalued relative to stocks. Now, there have been 2 times in the past where 1 ounce of gold could buy more than 1 share in the S&P 500. Now, in fact, back in 2011, you could use an ounce of gold and buy 1.5 shares of the S&P, and in 1980, the same ounce of gold would buy you 5 shares in the S&P 500. Now, with the S&P at around 44.60 today and gold hovering at around 1920, the S&P to gold ratio is around 2.3, and it seems to be falling. This means that gold is still cheap relative to stocks. And I think this is a better indicator that can tell us a whole lot more about gold rather than just the raw price. Because during this gold supercycle, the price rise won't just be from investor demand, but I believe it will also be from how much value the US dollar will be losing as well. So keep an eye out on both the price of gold and how much it is relatively to other assets. Now, if the S&P to gold ratio falls and you can use an ounce of gold to buy 1 or more shares of the index, that might be a good time to consider converting some gold into stocks. But we aren't quite there yet. Now, there are many ways the price of gold can rise during this super cycle. It could be simply investors piling into gold because it is the best asset for the coming decade. Or if the financial system does collapse and a monetary reset occurs that involves gold, then we can see a revaluation happen overnight, right? That means the price of gold could literally 10x in an instant if this outlier scenario happens. And right now, there are a lot of events in the world that are making countries, investors, and everyday people really wake up to the reality that you probably need to hold some gold, right? Inflation is so incredibly high today. And personally, within my own friends and family, a lot of interest in gold is building, right? I have people I didn't talk to for years suddenly come off the woodworks asking me a bit about precious metals. And local dealers are experiencing record sales, and all these are happening without mainstream media coverage. And I find this actually to be quite a good sign. Let me explain, right? By the time mainstream coverage happens, gold will be well into the super cycle and maybe even reaching its peak. It is when most people are silent and a majority are still ignorant that you really want to get in. Now remember guys, recent events have shown to the biggest gold buyers in the world, the central banks, that the US dollar is not 100% safe, right? They need physical gold as reserves because if you don't hold it, you really don't own it. Now I believe that 7.9% inflation is just a start and it might persist well into the future. The recent rate hike by the Fed has little to no effect on the real interest rates, which are still deeply in negative territory, and I really won't be surprised if we see double-digit inflation by the end of the year. And if we are true to ourselves and pay more attention to the prices really around us, it already feels much more than the CPI figures of 7.9%. Now, I think we are in the beginning stages of the gold supercycle and commodities in general, and what might happen over the next decade could really shock us. Now, I've no idea how long this bull run will last. According to the previous two, they lasted between 9 to 10 years, and if this current run really started in 2016, perhaps we have another 4 to 5 years left to go. Now, it's really anyone's guess, but I think we need to get prepared. Sure, if you're an investor, this can be an incredible speculative play, right? But I think the bigger issue of commodity bull runs isn't so much that demand is, flowing to gold, but how much value the dollar has lost. We need to remember that money eventually flows where confidence lies, and confidence is building in hard assets such as gold and silver. We shouldn't really be bothered about short-term noise like the US dollar index, which could rise in the short term, but instead measure your purchasing power in terms of the amount of day-to-day stuff you can actually buy. So are you able to buy the same amount of milk, eggs, and bread with the same amount of dollars today compared to 10 years ago? I don't really think so, right? Now, if you're a gold stacker, I think we really need to be prepared for high premiums on physical gold, because this time it won't just be everyday people like you and me buying the physical stuff. It will be big central banks whom I believe will start stockpiling even more gold down the road. Now, this demand for physical gold will continue to be strong and even accelerate as countries realize they need to diversify away from the US dollar. And this means that the price of physical gold could really diverge from the paper market. Right now, the premiums for a 1 ounce gold coin is around 4% easily, but I would be mentally prepared for it to rise to 5 or even 6% within a few years. So if you're still waiting on the sidelines hoping for premiums to fall, I think you might be waiting for quite a long time, guys. And if a reset does happen, you'd be wishing you had a physical metal and not just some paper contracts. I believe that the price of gold will rise well above $2,000 in the coming years, but will it reach $10,000 or even $30,000 an ounce? No one can predict the future, but the signs are showing that it could be a real possibility that we could hit 5-digit gold, right? Trust is slowly being eroded away from the dollar, and nations will likely diversify away into a neutral asset like gold. And just taking a peek at the US national debt, it is really concerning. It's over $30 trillion, and I know every time the debt ceiling gets raised higher and higher, but eventually that debt has to be paid back. And what if it gets defaulted on? Or what if the government decides to just print away money to pay off the US debt? Now, I think we are living in an era where there are too many dollars chasing too few goods, and that is why I am still going to continue to buy gold. I don't see inflation slowing down, and I don't think smart decisions are being made by the Fed. So let me know what you think. How high do you think the price of gold will reach? Do you have enough gold stashed away? Let me know in the comments below, and if you enjoyed today's video, be sure to smash the like button and subscribe for more gold, silver and finance videos. Thank you guys for watching, and I'll see you soon.